Good afternoon, everybody. Welcome to this is our Halloween 2024 edition of Bull Sessions. Happy Halloween to all of you investors out there. We do regard this in every sense of the word as the trick or treat season for investors and do like to treat it as such. My name is Mark Robertson. I am joined here by my dear colleague, the magical mathematician from Michigan, Ken Kavula. Good afternoon, Ken.
Good afternoon, Mark. We can just call me the director from Mid-Michigan from now on if you want. Okay.
Okay. We still think of you as magic, Ken. You can't shed the
Okay.
you can't shed the label. We're also joined here by Kim Butcher. I think Ken or Kim is actually back. She might still have her toes in the sand. It's just on a different part of the world. How you doing,
Well,
Kim?
no, I'm just sitting in the condo. No
Nope.
toes in the sand today.
No
No sunset to watch.
too much elevation for stand up that high, huh?
Yeah, yeah.
All right. And we're also joined by Matt Spielman, and Matt's part of that AI discussion coming. What'd you say, Ken? In a couple of weeks
It,
with the Better
it'll
Investing.
it'll be just about exactly a month. It'll be
Okay.
A
Broke up a
month?
little, broke up
a
a little
month and
bit.
a half. It'll be on December 12th.
Oh, I thought it was the upcoming one. Well, great. I have a lot more time.
More time to prep.
No, it's
I'm
November
hoping,
7th.
I'm hoping I gave you the wrong date, and Matt's right. It's November 7th. Okay.
All right. Well, I get credit for helping out the program then for bringing it up.
Yes, you do.
Good stuff. All right, we're going to continue our stocking of best small companies. We're going to hit some of our favorite sources of ideas here pretty hard and pretty quickly. Take a quick look at Palantir Technologies. It's a company that's come up quite a bit recently, but again, you can see all the different sources that we've gone over here over the last month. I do want to do a shout out and a special thank you to Diane Grace, Betsy Wills, Kim, and yes, even Kevin Gologly did a really nice job with the emerging companies for Hoover's Handbook and pointed out the library resources. And of course, Matt is always fact checking and helping us to discover things in the back scenes. News
We'd like to thank Forbes also, Mark. I'm sorry, it's Fortune, isn't it? Yeah,
Fortune.
for that new list they just put out.
Yeah, and I want to draw everybody's attention to the fact that it came out this morning, which made it really easy to put stuff together for you guys. So,
The October surprise.
the October. Well, at least they told us to expect it on the 29th. The surprise would have been if they missed that. But anyhow,
You
all right,
guys love a challenge.
let's go ahead and get underway. Here's a quick reminder that Portillo's is not a sponsor of this session, although they should be. Some fun facts on the left and an observation on the lower right that we're still not back to my cost basis. All right. Here's our weekly disclaimer with a little bit of pumpkin patch thrown in for celebration. No investment recommendation is intended, just like it says. That's exactly what it means. This is an educational demonstration. We're basically going over the philosophies, methods, and techniques of the modern investment club movement. If we hold something or own something, we'll try to remember to disclose that, but please make your own decisions about anything you hear about here. We know that you're smart enough to do that. And if you'd like copies of slides or if you have follow-up questions or suggestions, our two email addresses are down there at the bottom of the page. We do have a roundtable tonight, so we will try to keep this relatively brief, but there's virtually no way. As Ken knows, we're always putting about 19 pounds in that 8-pound bag, and we'll figure out a way. All right, here's a look at the markets as measured by the value line arithmetic average. We did have a little bit of a sag back in the last week. Things are kind of just floating around that nice blue trend line. And this is the week that most of the Magnificent Seven reports earnings, and so far so good. I think I have not actually checked on anybody yet, but I'm not aware of any big surprises to the upside or downside, at least not yet.
Well, I think the very first one doesn't come until this evening, Mark.
Is that right? Okay, so the surprises come later. Although I don't expect surprises. I think that the five of them have been chugging along pretty well that are reporting here over the next few days. So the bottom line of this slide is the average forecast for the average stock, depending on what universe you're looking at, is still right around 9%. So 9% is a good stake in the ground. We want to be finding stocks that are 5 percentage points above that, and that's kind of what we're hunting for. Okay, Ken?
Okay, Mark, let's keep going there.
All right, this is really kind of a fascinating slide from Bespoke. The link is down there at the bottom, but they're comparing the S&P equally weighted index, which is, if you want to look at tickers, would be ticker RSP, Ralph, Sam, Patricia. So the equally weighted index versus the S&P 500 cap weighted, which is the one that you hear about all the time. And you can actually find that that has an ETF under SPY. And I guess I was stunned because the first time I looked at this, I figured that the cap weighted one, which is getting all the press with the Magnificent Seven, should be on top, but it's not if you go back far enough. And that's pretty wild. I didn't even see it. I saw it upside down the first time I looked at it. How about you, Ken?
Well, we don't even have to go back very far. It looks like they evened out right at the COVID recession. It looks like that blue line is right down about as far as the gold line. And then they took off right after that very short-lived recession. And it looks like the equal weight has not looked back. It's stayed ahead and stayed reasonably far ahead.
Yet it's not getting any of the press.
Yeah.
And over the basically a 10-year period, if you go back 10, it's lagged it a little bit, but
well, and I guess we're saying, Mark, that if you go all the way back to January, maybe it's 03 rather than 02, when they were kind of right even with each other, and put your money into the equal weight rather than the other way, you'd have an extra 800%, maybe 750%, I'll say. Okay?
Yeah, and again, the reason we keep bringing this up is it really is an urge or a nudge to practice all of the above investing. And that is to have a blend of small, medium, and large companies in your portfolio. It's one of the prevailing or predominant themes of Jim Clunan. He's the longtime chairman. He is now deceased, but longtime chairman of the American Association of Investors. And in his book that he wrote just a few years ago, this was a very powerful theme. And all he was basically saying was the same thing that George Nicholson said. You got to own large companies, medium-sized companies, and small companies to experience that blue line.
And even though we would say that the S&P is mostly large companies, there's still a huge variation in large companies besides very small large companies and very large companies. So even with the S&P, if you go with equal weight, you're getting a little bit of variation that you don't get if you focus just on the Magnificent Seven or something similar to that, or on the Dow 30 for that matter.
Yeah, and then of course this one we focus on the one shown by the green bars because it is 1,700 companies going well beyond the S&P 500 to do all of the above investing. So here's our performance perspectives for now. You can see those two, the orangish, kind of a rich orange, autumnal orange, Wilshire 5000, which is again a broader measure than the S&P 500, but when it's cap weighted, they're not very different at all. You can see that they actually are hugging each other in the rankings. They're SPY and the Wilshire 5000, but then you can see that value line arithmetic average is down there, and historically it's been higher, so it does portend some opportunities. Now, Ken, I know you're not allowing me to do the update on the best small companies for this year, but I thought maybe I could sneak in a 10-year update. If things were to finish as they are today, that's where our best small companies will end up with winning 8 of the last 10 years. So
that's still a nice advantage on the index, 3.3%. If that was happening for my last 10 years, I think I'd take it in my investments.
16 is okay with me too.
Yeah.
So I just knocked on wood. We have how many days? 4 days until the 31st. something
Well,
like that.
2.5 trading days now.
2.5 trading days, and we have a lead. That's all I'm going to say. We hope that it.
You're doing everything you can. Let's go to the next slide.
Hope it does. Hope it behaves better than the New York Yankees. Oh, sorry about that. All right, here's our Ground Dog Challenge update. Very few changes on the right-hand side. The average groundhog is checking in right around 15%, and not a whole lot of motion, but some very familiar names. We did confirm that Keith Tubbs in the number 2 slot is a member of the club that's at number 11, that Four Corners Club. There's a number of their people on here. Fritz Braun is also in that club. So is Keith Meter. And there are a couple other names. I think Nadine Tubbs is probably in there too, but they are clearly doing pretty well, even if they don't have Jim Gallagher's ASTS rocket that took off and made him $1 million. So,
well, I can see that Jim is back to $1 million plus lead again. So he had fallen just a little bit under $1 million at one point, Mark, but he's back to $1 million plus now. So.
He is. He's got a pretty solid lead. The top of this stays pretty much consistent. Kim is right up there at number 8, and she's ready to make her run with a fourth quarter Ardelyx surge, and I'm all for that too. From where I'm looking at. So 13 clubs in here, Ken. That applause you hear is coming from Florida. All right, and here's a question for the audience, or Ken already knows the answer, so he can't answer, but what's missing from this list that normally we see and we do not? And I won't keep you all in suspense because we don't have time for it, but there's no italicized entries, which means there are no celebrity groundhogs in the top 40. That means David Einhorn, Warren Buffett, any of the indexes that we take a look at, they are all not in the top 40. So that's what I mean by where have all the cowboys gone? And this market is challenging some of those institutional investors in a big way. So we're happy to outperform them. It's fun.
Yeah, I think, Mark, if you're in a club, you've understood the problems that the Cowboys have had, because when a market's doing 30, 35, 40%, it's awful tough to keep step with it. It really is, especially in a smaller portfolio like a club would manage of 15 stocks or so. When the market's just on fire, it's very difficult to beat that market. It really is.
Mm-hmm. All right, pressing on. A few moments with Ben Carlson. I actually know Ben, not a friend, but certainly an acquaintance. But he's from Michigan, Ken, if you didn't know that, out of Grand Rapids. And I just get a real kick out of this slide, this powerful reminder about the long term. Look at the recessions on there. And this was all part of a debate about buy and hold investing. And of course, we clarify on the upper right that we're not buy and hold investors. We're buy and hold for as long as it makes sense to do so. But I just love where the conversation went in a few different areas. Ken, you said you like I know you like Morgan.
I really do. And I like his quotes there. The 2010 quote that says, don't buy stocks, they won't go up. And the 24 quote that says, don't buy stocks, they've gone up too much. So what a difference 14 years makes, right? He's still telling you don't buy, somebody is still telling you don't buy stocks.
That's so painfully accurate, in terms of performance chasing and weak advice. And we'll just leave it at that for now. But again, the best strategy, in our opinion, is to buy and hold with a discipline that helps you to sleep at night and hold on to them for as long as it makes sense to do so. And Churchill's probably right also. One of the best. And of course, here's our graphical reminder of how powerful this year has been over the long term, but it's also a pretty powerful reminder about Ken's favorite time frames.
Oh, because I'm old, you mean? Is that what you're trying to say here?
I know I wasn't. I just know how much you like to point out that anytime you get out here above, we'll leave that there. 20 years and above, the number on the return is 10 or 11%, basically.
Yeah, and that's the basis of our measurements for the most part. We're looking for a good solid club to beat that 10 or 11% by about 5 points. If you can do that, that's great. And if you can only beat it by 2, that's absolutely wonderful as well. Considering that many of the funds we look at clock in at negative numbers to that 10, 11%.
Yep, the average fund is minus 3% versus the market. So right now, well, we'll talk about that tonight at tonight's roundtable for at least a moment. All right, Joseph Carlson, I know many of you out there have actually chimed in and listened to this guy a little bit. He does put on a good show. Ken Williams shared a perspective. I think Ken's in the audience here today. Well, Joseph just recently went over his favorite stocks in his version of a Pounce Pile. And I was kind of hoping that maybe we would score a best small company idea. And they're basically mostly too large, anybody that's close enough to it. But I did want to get on the screen this company down at the bottom, just so it's at least on the plate. This Anduril Industries, he was pretty high on, and it has to do with technology for drones and aircraft and military and defensive products and services. And it's still a private company, but they don't always stay private. And sometimes it's a good idea to be aware of a group like that. So that's the reason that that's there. And then the other thing that came up, and I just want to spend just a couple minutes talking about, we've talked here from time to time about how challenging early stage and high growth, those type of companies can be. And this is a company that Matt and Marie Frank and a few others have talked about fairly extensively on the forum. And it's a pretty good example of a company that really challenges the analysis techniques and methods of companies like Morningstar and Value Line. And trust me, they're not alone. It challenges all of us, but it really shows up. And what I'm really kind of gritting my teeth about is I was seriously considering buying this company back at the beginning of August, and the stock price was 28. And then I looked at these numbers and I just got kind of scared off. Most of us would. Any argument there, Ken?
No, not at all. We were doing a industry study in the Baker Model Club at just about this time. In fact, maybe even a month before this, Mark, we were doing it at the beginning of summer. And Palantir was on our list, but that's not where we settled for our best stock in the industry. We were looking at this sub-industry of computer security, cybersecurity kind of ideas. We still think it's a great idea, and we're very happy with the company we bought. But Palantir was on the list and didn't make the cut.
Mm-hmm. And just notice that these were the returns based on that price at 28, and then notice where it went over the next few weeks, up to 42. You see the price is taken off. You can see the price over here on the right, and the green bar is kind of maxed out. And this does provide us with basically a nutshell explaining how challenging this realm of investing, because it is a dash of speculation for sure. Value Line is basing their projections and the numbers in this projection box on an operating margin of approximately 29%. And they could be right. But if you really start, this company has a lot of respect, very formidable. They have some incredible relationships and contracts with the government, as it says there on the left, and it's feasible, and it's imaginable, and perhaps even reasonable that this company will go up and achieve in the next 5 years, just looking out here, an operating margin closer to 50, which of course brings this number really into question. Okay, so again, I'm not saying I know this is going to happen. I'm saying it's possible. Now, when I was really beating myself up over this a few minutes ago, Ken talked me off the ledge by reminding me that they don't always work out that way. And when they do this instead, it can really be a rough ride.
I
So
think, Mark, it points out the wisdom of Nicholson way back in the 40s when he suggested that in order to keep uh, groups of investors safe, he suggested that you have to look at companies that have earnings. You can't get enamored of companies with no earnings and then do projections, because as often as not, and this is what I had to remind Mark of, that while he has a really rosy projection going forward, and Palantir seems to be on that trajectory, it's just as easy for some of these smaller companies that have been negative for a long time with earnings to hit that break-even point and to bounce off of it in the other direction, and to bounce just like a pool ball on the edge of the table, and to come right back down again because the management isn't being able to find a way to turn the top line growth into the bottom line profit. They just can't do it. They're not savvy enough to make that happen. And you know, then we rely. Mark reminded me. Then we then rely on the idea that you need one Microsoft to balance out all of these mistakes that you probably are going to make when you buy companies like this. Even though occasionally you hit the jackpot with companies like this, we know you're going to have mistakes when you look at companies like this as well.
yeah, so these guys are very close to that Brian Feraldi breakthrough moment. Kevin Galogli's group spends a lot of time on this also. They do have positive earnings right now, Ken. Not a lot of them, but they do have some. But, you know, I find myself looking at that return forecast back about 2 years ago when the stock price was about 6, and just kind of salivating a little bit. So again, here's the situation. I mean, just in a matter of 3 months, value line has gone from a low forecast of 21 up to 35, and they've basically begun ratcheting up some of those forecasts, trying to keep up with this. Now, again, this is really a challenge because we've seen it with companies like NVIDIA, where the analysts were all over the map, and I almost threw a switch and stopped following them because they were so erratic. And here's another case where this is really a challenge to kind of stay ahead. And then I can't resist this down here, Ken. If you want to calm down your world, I would argue that that's a lot calmer range to be operating in and watching these fluctuations in stock price. So that's part of why we believe that it's a superior.
And what's nice about the proof also, Mark, is it's telling you this is not a place that we think in the near future you're going to make huge piles of money.
No.
You still have a relatively modest potential going forward.
Yeah, even at this 28, we were only looking at 7%. So, so I feel a little better about it, but I'm still reeling. So one of the things as you're thinking through what is possible for a company like this, and Ken's groups are notorious for this, take a look at the companies. You know, they're not exactly the same companies. In some cases, they're not even similar, but they're in a similar vein, and just get a feel for, well, where could this conceivably go? And on Y charts, we are shown that this system software sub-industry, these are the averages for operating margin and a first cousin of operating margin. So something in the 40 to 50% range is on average achievable. You know, so it is reasonable. And, you know, you look at your Microsoft up here is on the upper end of the threshold. But if these guys are as good as some of the companies that they appear to be emulating historically, it would be pretty natural for these guys to end up with certainly something in this average range.
Yeah, when you're actively managing your portfolio can point you at a lot of places to do what we call industry studies. Our portfolio has United Health in it, and it had Checkpoint Software. And United Health was hit by a massive data breach, which caused a huge disruption in its visual analysis. And then on top of that, Checkpoint Software was doing so well that its PAR had moved down to almost zero and had stayed there for 2 or 3 months. So in combination of the data breach at United Health and a great company that had virtually no return left in it at the moment, that led us to do a group study And we ended up with 3 or 4 of these companies on this list in the study, Mark. We ended up choosing, instead of choosing where you went to, which was Fortinet, we went to, now the name's going to just leave me entirely.
You're talking about Palantir?
I'm sorry. We went to Fortinet, and instead of Palantir, right? We ended up buying Fortinet, and we're not unhappy with it at all. We've owned it now for only 3 or 4 months, and it's doing okay for us at the moment. It's following the rules, doing what we thought it was going to do, and it had a lot more potential going forward than Checkpoint did.
So anyhow, the moral of the story is to become familiar with what is truly feasible, and it is very industry, or in this case sub-industry specific in some cases, and just learn more about it. I think all of those companies on the right are worthy of watching for opportunity for sure. And one last look, all we're basically saying is we think it's feasible for that trend to actually continue and to approach these levels that you see on this chart. And if that's the case, the company is certainly nowhere near the sell zone, and obviously we'll be watching for it to be closer to the buy zone. I'll probably put an alert on it if the proof reaches 8 to 10. I want to know about it.
The only warning sign, Mark, that I would put on the last slide, the one that right before this one, where you were showing the averages, the only warning sign I would put on it is try to be savvy enough to understand how large the industry actually is. And my experience, personal experience with doing lots and lots of industry studies, is that the larger the industry becomes in number of companies, the less reliable the performance metrics for the entire industry become. Because when you have a huge industry, think generic drugs or something, or think biotech, when you have a huge industry, you have as many non-performers and not nearly as many great performers. So those averages tend to be drawn all in different directions, and they don't necessarily represent what you'd like your companies to be aimed at. So this is a pretty decent size industries, industry, what's there, 10 or a dozen companies there. But if that list is 30 long, view these averages with a huge grain of salt.
Absolutely. All right. So let's go ahead and move on to our best small companies quest. We're about a half hour in, so we've got plenty of time. And again, this is our annual effort to have a happy Halloween. All right, Ken, I really love this one. This one came to us courtesy of Marie Frank, and it's a tip for all of us and all of you out there. This website that she shared with us, stockanalysis.com, is free. It's got free features, and you can do a lot with the free features, including what I'm showing you here. I basically said, show me U.S. regional banks and sort them from highest return on assets to lowest. It took about 15 seconds to generate this list using that stock screener. So I think, Ken, did you do any playing around with this one?
Just a very little bit, Mark. I didn't have a lot of time, but it looks like a tool that I'm going to put in my toolbox, especially since I can do some pretty broad screens for free.
Yep. And I'm going to check out, it's $9.99 a month for the full boat of capabilities. So we'll be checking that out and see what that looks like, and maybe even an emergency like I had yesterday when our data service went down. I'll have a backup to go to.
Mark, I put this list up against the curated list that I had on the bull session last week of the regional banks that I thought were probably going to be contenders for our list, and there's considerable overlap between the two of them. So I have some faith in this screener that it's pulling out the kind of things that we're looking for. I did notice that some of the smaller banks are not represented on this list, even though I know they have ROA that's in this range. So I'm thinking to myself, I think that the screener advertises 5,500 companies or something along that line. And so I'm thinking that maybe some of the smaller end is not included in their database. That's the only comment that I would have about the screener.
Well, I have emails from several people to say, yay, PFBC made the list also.
Oh, PFBC, yeah, it's not one of these smaller banks in the study, no. But FMBC, Farmers Merchants Bank, I think is the name of it, is not on this list, and I know it would make the list if it were in the database. I know that for certain.
And I remember that it was on our list last week. So yeah.
Yeah.
All right, good stuff. Good capability there. So now let's go ahead and turn to some of our favorite sources. This one kind of disappoints me a little bit. I actually know the manager of this fund, and they have a pretty decent track record. But like many of the small company funds, Motley Fool Small Cap Growth ETF has actually had a kind of a rough run. But they do have decent growth, things that we look for, and many of the companies are going to be the type of companies which would capture your attention, but I'm not seeing a whole lot of capturing going on here. So I decided to go to, well, what have they bought lately? Is there anything here that's compelling? And the answer to that is also not very. LiveRamp kind of caught the attention for a little bit that they first started buying it back in February of 2024, but I was just a little disappointed. So it is the true needle in the haystack moment. There's just doesn't seem to be a needle here, Ken, unless I'm missing something.
Mark, what if you go back to this screen right here, what I did when you sent me this list is I said to myself, I've looked at so many lists now in preparation for putting our list together. What kind of overlap do I see on this with the lists that I've looked at? And frankly, I was disappointed that I saw very little overlap between this list and a lot of the other lists that we've been dealing with in the last 2 or 3 weeks. So either Motley Fool's really off in a very creative place by themselves, coming up with ideas that nobody else has, or they're a little bit on the outside looking in as far as zeroing in on some of the best performers. There are some companies here that we've looked at in other places. I wouldn't call Gentex, for example, a small cap company, but I understand where they're coming from. Globus Medical we've looked at before. There's that Toast that Betsy Wills talked to us about. That's a software company. And I think I noticed our UF, there it is right down there, our UFPT. So there's a couple of them that overlap. We just looked in my investment club last night at BRBR. They make energy bars, but for the most part, these are unknown quantities, and at this late date, I don't know if I'm ready to go through another list of unknown quantities again. So,
yeah, your Neogen is on there, isn't it, Ken?
Which one, Kim?
Neogen, N-O-G?
No, that would be
Neogen is N-E-O-G.
Oh, all right.
Yeah, that's the only one that's got high enough numbers to really look at in any great depth. The only one that might qualify would be this. Which one is that? HRI, which I believe is that Hercules.
Capital.
Herc Holdings, yeah. So anyhow, here's a quick reminder. Again, with Diane Grace, we looked at the Oberweis microcap and found a few companies which threatened to make our list. And here's just a quick reminder that the Motley Fool 100 TMFC is among the top performing companies over the last 10 years. Definitely making this list. Also makes the point, first of all, I hope you guys don't get tired of us pointing out that the average of these numbers adds up to about 13 or 14%. If you want to be a successful investor, like these successful institutional funds, you got to have growth with very few exceptions. And then notice how few, this is out of a list of over 600 funds. Notice how few of them are beating the market by 5 or more. So these are the ones that are, these are our valedictorians. You want to look over their shoulders. If you're deciding to cheat on a test, look the other way, Ken, or listen to something else. We're looking over the valedictorian's shoulders, trying to find ideas. So let's go ahead and take a quick look at the Motley Fool 100. We won't stay here long because these are not simply or not just small companies, but we do have some decent growth rates here. NVIDIA is in this one. This one has a number of the QQQ, Magnificent Sevens up at the top. These guys did just add Lilly. Nice move about a half a year ago. Notice that they have, this is definitely going to pass the Kabula test for companies.
Absolutely. There's AMD down there, Adobe down at the bottom, Intuitive Surgical, Disney there. So I can see why this one is performing, although they are holding a number of ones that I think are maybe a little bit past their prime, but I'm not the manager. They are the managers. So.
Yep. So it's a pretty decent fund all in all. And interestingly enough, this one's actually got a higher growth rate than the small company fund. That's a hint in case anybody from the Fool is listening. All right, these guys are pretty hot on DoorDash, and I just find myself wondering, is this the type of company which might be Palantir-ish? And I'm having trouble convincing myself that that is the case here. They actually have a track record. They don't have earnings yet, so earnings are missing from here. Still in the negative margins. What I also found kind of interesting is nobody can decide where to put these guys, which is a common thing you find with industry classification for some of the smaller companies. So this does not taste as intriguing as Palantir to me. Any thoughts on this, Ken? I know.
Is that dot where earnings usually occur? That 2008 dot, maybe? Is that a dot, or is that just a kind of a glitch in the program?
This dot is a projected earnings out in 2028.
2028, they expect to go positive in earnings. Okay, well, then I think I would wait till 2030 to even look at it. So. Just my bias. I'm sorry.
Yeah, we do like to find them even at that inflection point if we have hope. Price to hope ratio is important. All right, so we'll leave that one. All right, let's switch to another source that's been very good to us in the past in terms of generating ideas. And you can read who Kris Jenner is because it's not the Kris Jenner that some of you are thinking. So it's that guy, and he used to run the T. Rowe Price Health Sciences Fund, and he had a heck of a track record there. So he now runs this private hedge fund, and very quickly, this is where Ken realizes he can go up and take a beverage break, because those are all pre-EPS, and the ones that aren't.
That's a polite way of saying no earnings, right, Mark?
That's right. And then, a bunch of the other ones are large. Well, not a bunch. A few of the other ones are very large. Johnson & Johnson's and United Health come to mind. And then I was kind of surprised. I got kind of excited when I saw Charles River, because I know that's a Kevin Gologly favorite, but it's too big for us. So
I'm excited that he has Beam in there, and I'm thinking of the Beam booze, but it got bought out by a Japanese company, so someone else has used the call letters.
Yep, they are borrowing the Beam call letters now. So, and by the way, Kris was actually one of the first places we saw Ardelyx actually invested in back in 2017 using this chart. Again, I would urge you, if you're not familiar with Insider Monkey, you can do a bunch of this stuff for free. They just want your email address, but they don't abuse it. But Insider Monkey is where you can actually take a look at what people like Kris Jenner are investing in. All right, so nothing here, Ken?
I'm not real excited about this list, no.
Okay, so let's move on to talk just a little bit about Ian Castle and Microcap Club. And this was the other quiz question, Ken. What's missing from this picture?
Well, I don't see any women in that picture up in the corner up there. And I'm not sure I'm seeing any women anywhere in the room. And that's been my experience when I travel to clubs that are really into kind of very focused, they call it focused investing. I call it something different, but
Well, core is a good word too. I do think that women tend to be more conservative. Is this a matter of, some of those old perceptions which we challenge every year with our best small companies that you can find up straight and parallel amongst the smaller companies? Maybe microcap is really an off-putting for some people who don't like risk or the perception of risk. I don't know. I found it kind of interesting. I'd never noticed this before. Kim, do you have any thoughts on? Because I know you like to. You definitely like that non-core part of your portfolio. Does that just make you weird?
I am not weird. I am unique and different.
Unique. Okay.
Unique, like fine wine, I've just percolated differently.
Well, I think you should attend the next conference just to break through the ceiling or whatever's going on here. We'll have to find a way to make that happen. All right, so why do we pay attention to these guys? First of all, there are a number of people on here. In fact, some of Kim's boyfriends are on this page, and one of Ken's. These are some pretty smart people that have very good records in investing and really have enjoyed monitoring them for ideas in the past. So Jake is, I think Jake and Kim actually correspond. Is that still true, Kim? I think we might have lost Kim to a potential meeting she had coming up. Plus, I called her weird, so maybe she just stormed off. I said potentially weird. That doesn't matter. All right. So here, let's talk about Ian Castle and a quick article, Super Investors of Microcap. I would encourage you to read it. I really do want to have a better understanding of what some of the perceptions are. There is incredible potential here. You can find companies that actually halfway meet Ken's demands and expectations every once in a while. And as Diane Grace demonstrated with the Oberweis microcap, it can be an interesting area to find some opportunities. So one of the things I wanted to do is just demonstrate real quickly using Insider Monkey to figure out, well, what is this Connor Haley up to at AltaFox Capital? Looked up AltaFox Capital and found this list of companies that almost passes a Ken Kavula list. It's nibbling at the edge, right, Ken?
Well, I'll tell you, Mark, that second one is on that curated list of banks, that cash, and that's only, I know that only because I remember the ticker from it. But this is it's kind of a schizophrenic portfolio. I mean, I see Alphabet and Amazon and Microsoft and MasterCard, and then I see a bunch of names I have no idea what they do. So it's maybe I've heard that word barbell a lot of times. Maybe this is a barbell with some of the Magnificent Seven and then some of the very small, very, very small companies that make up the microcap universe.
Yeah, this one here is coming up in a number of fairly well-recognized circles. This app loving, I don't know anything about it, but you mentioned a barbell, maybe a little bit of two-phase investing or something there. It's hard to argue with 33% over the last 6 years. So again, it's somebody that can probably generate an idea or two for us, and we'll just leave it at that. I'm going to go back and check in on Mr. Smoke and Mr. Melby as we go through our final check. But here's a look at the number one that he's actually ridden up. In fact, I think he's got $61 million invested in it. This REV group, which was new to me, but they make the stuff on the upper right, and it does appear to be a kind of a breakout or turnaround situation of sorts, certainly with the stock price. But this is an attractive picture down on this side, so it could be something to at least have on a radar screen. I have added it to our coverage, obviously. And again,
I will tell you, Mark, that this came across my radar during COVID when our local fire department bought 2 fire trucks that had a really different profile than they usually have. And I didn't recognize the brand names. And the brand name was Rev Group. They bought, our local fire department has 2 Rev Group fire trucks. So as I always do when I find something, I wanted to know, was it public and was it something I was interested in? Back during COVID, you would notice that I would have found not very consistent earnings or no earnings. And so I didn't do much past it at that point then.
Yeah, and this is a situation where he sees an improving landscape of opportunity, for the municipalities and local governments that are retooling and refurbishing their first responder fleets. So interesting.
What was the impetus for me, Mark, was that I knew that a lot of COVID money was being used by emergency responders to buy new equipment. A lot of the money that was used to incentivize the economy and to keep it from crashing and everything, communities were using it for, in a lot of ways, the smaller communities were using it very wisely. And I thought that was a pretty good growth driver. Maybe I was just a little bit early and I should have stuck with it, huh?
Yeah, the flatness of the growth is troubling at best. I mean, it's a value play. It may be something you date and not marry. I don't know. But it is interesting to see that it is dominating his particular portfolio. All right, so let's go ahead and close out with the 100 fastest growing companies according to Fortune. Marie Frank, you still bringing this to us? Go ahead.
Before you go on this slide, if you go back to that analysis that you were doing there, we got a good question in the audience. They're asking about these bottom 4 lines right here. I'll ask you in the audience to think of the bar that you set when you do your zoning on an SSG, and you draw a line and you say, I'm going to buy it below this line because that'll be the buy zone, and I'm going to sell it above this line because that'll be the sell zone. That's all Mark is telling you right here, that he would sell it at any price above $18, and he would buy it below $21. Is that right, Mark? Am I reading that correctly?
I think I'm probably missing a refresh. So ignore those numbers.
Okay, yes.
What Ken is describing is accurate.
Correctly, but the numbers don't make sense. Okay.
Right. I probably just forgot to hit F9 for those of you that know what that means. So.
All right. So that's what this usually tells us, folks. Okay.
And congratulations. I just put that there to see if anybody would catch that mistake today. No, I screwed up. Ignore that. But we should probably come back and talk about that concept in greater detail at a future session. So moving on to these guys, they came out this morning with their 100 fastest growing companies. They show you basically how they're ranking them. How do I know that this is a list which we will find interesting? Thank you, Marie Frank, once again, because almost all of those companies have been part of conversations here over the last several years, some community favorites included. And of course, they go through and tell you how they do it. So what I did is I inputted all 100 into a dashboard, and then I sorted it from lowest to highest growth. So we're starting at the low growth end. And again, we would probably not be very interested in this end of the picture unless something needs to be tweaked or updated or something has been missed. But there are some interesting names here. They're just not necessarily growing fast enough or just simply interesting enough from a return or a quality standpoint. So that's number 81 through 100. Going up the growth ladder a little bit, getting into the middle of the scope, we start to see a number of companies which do attract our attention at least a little. Anything on here jump out, Ken?
Well, Mark, when I was perusing this list, I didn't have a whole lot of time, so I kind of waited until I got to double-digit growth before I got interested.
This is part of the Buttonwood portfolio. We think that one's pretty cool. And then I reminded Ken that he picked Copa Holdings in the roundtable years ago.
Yeah, 4, 5, 6 years ago, right? It's a Mexican in Cancun, an airport that this company basically runs.
And I'm going to buy a share of this one just because I love their logo and their mascot. All right, so here is the middle of the pack. And we start to see more and more of the companies. Here's a recent roundtable selection. Here is a very respected company, a Cy Lynch favorite over the years.
Yeah, I started looking at 9 and above, Mark. So the ones from 9 to 10 were huge companies, big companies, and I recognized all of them. So I recognize a lot of them from roundtables and from the bull sessions that we've done. There's Technoglass that we've talked about many times. Green Brick Partners down there is still on the list. Cactus has been showing up on lots and lots of lists. I don't know very much about the company, but the fact that it shows up on many of the lists makes it interesting for me.
And by the way, Cactus is a longtime selection of the Rocky Mountain Club and Betsy Wills and Ralph Fudge.
Okay.
So they've been on
there's obviously a lot of good ideas on here. We just talked at my investment club last night about Top Build BLD. That's a really pretty visual analysis for an SSG. And Esquire Financial is on that shorter list of banks that we're considering. We do want to put one, maybe two banks into the best small companies list, and Esquire is a candidate right now.
Yep. And the audience did recommend we take a closer look at Consolidated Water. So again, we're starting to, it definitely passes the Kavula test at this point. And
oh, absolutely.
Interesting ideas. All right, so here's the second group, the 21 through 40. And the same is true here. There's a number of companies. Oh, by the way, I did want to mention Technoglass. I was going to mention, then I wasn't going to mention. That was our best company last year, and it's in the number 2 slot this year, so I just jinxed it. Moving on. Here's one from Ty Hughes last year that is at the top of this year's best small company list.
Well, and there's another contender up there, Mark, TBBK, the Bank Corps. That's definitely a contender for the list. Axos is on here, I think, somewhere. I just don't see it. Maybe it's coming up yet. I was really interested, Mark, to see the growth in Planet Fitness.
Yes.
I can remember talking about Planet Fitness when you and I traveled to Chicago, and that had to be 10 or 12 years ago. And then it kind of fell out of my radar when they had a lot of real problems, but it looks like it's really back and growing really respectful. Never mind, it's growing.
Yeah, there's a number of companies here. Dreamfinders is a very green brick-like company in a different area of the country, and it's probably a threat.
Let me tell you about one fact about Comfort Systems that we discovered last night at my club meeting last night. Comfort Systems does HVAC stuff, and we found that some of its biggest customers in the last 2 and 3 years have been data centers. So if you're looking for a pick and shovel kind of a play with data centers, there's 2 companies that we have discovered that are providing very mundane articles to a lot of data centers in the country. That's Comfort Systems, which does the HVAC equipment, and CSW Industries, which provides things like vent covers and straps to hold ducting in place and all kinds of hardware for HVAC companies to use. Those 2 companies have become extremely profitable, and their backlogs are in the billions of dollars right now as they strive to meet the need as these data centers are being built all over the country, and not only data centers, but new industry in the tech area. An example might be Intel's new, Intel's new chip thing going in somewhere in this country rather than outside the borders of the country. So very interesting companies to take a look at. I don't think they're buys right now, but I think they're good, strong holds with the possibility of being a buy in the future.
Mm-hmm. And here's current residents, Monolithic Power, and former resident or alumni, Mercado Libre.
And do you know, Mark, if we both would have bought Mercado Libre in Minneapolis when we first tried to pronounce it, we wouldn't be doing these programs. We'd be sitting on a beach somewhere in in Florida, okay, sipping
Just
whatever we're sipping, because
just waiting for that.
yeah, this company has gone from literally under $50 to $2,000 in
Yeah,
probably the last dozen or so years. So
it's the type of company to watch for with tremendous scalability and
yeah,
delivering things that people need. So we're here at the top of the list, the fastest growing companies. Some of these probably get trimmed a little bit on an update. I really question this one. It might come down a little bit on an update, but it's starting in a pretty good place. But that is the fastest growing one on the Fortune list at this point. We will be providing coverage of their number one company, which was Tormo or something like that, TRMD, and Murphy and Axel Entertainment are in the value line, so those will be getting coverage very shortly. But I just see a number of companies on here.
and if you're trying to use a data source to come up with OMA, you won't find it because the American depository is OMA. Somebody help me out with the last letter. I don't remember what it is. Do you, Mark?
Yeah, Matt found it's B.
B, OMAB.
It
Okay.
doesn't look like it'll be OMAB.
Okay.
And of course, here's our ACM that's part of the Buttonwood portfolio and a number of recent discussions. MedPace is in the current portfolio. Wingstop is a tremendous performer from the past. So yeah, barking at the right tree. I do think this one's going to be interesting to at least run up the flagpole to see if it survives anything.
So we have some good new ideas here. We'll be getting together before Saturday. We have a program at 2:00.
10 o'clock.
I'm not 10 o'clock Sunday morning. I'm sorry, Saturday morning, November 2nd. Saturday, November 2nd at in the morning at 10 o'clock Eastern time, where we're going to reveal the list and talk a little bit about each of the companies on the list.
And for those of you that go to the wrong place on the wrong time, we will put the recording on YouTube, so we won't forget about you. Here's a quick screen on the companies in the database that just simply survive a first cut. And maybe this is where we were thinking Axos, Ken. I couldn't remember if they were on that Fortune list or not, but they're definitely near the top of this list. And they'll be talked about a little bit tonight, I suspect.
I'm going to present Axos Financial, and I'm probably a good one to present it because I've been a little bit negative about the company off and on over the years. So
always good to do a little bit of a deep dive. So a number of companies on here also that have been talked about recently. So again, we're in the final stretch. Let's hope that the next 2.5 days of trading action deliver us a victory, and that's all I'm going to say about that.
Mark has added to the database the company BFC, Betty Frank Charles, and it's a small bank. And I would urge those of you that are interested in looking at a bank or trying to find a bank to put that one in the running and do some little bit of diving about it. It's a small group of banks that have coalesced in Wisconsin. It's been around for about 150 years. The parent bank dates way back to the 1880 somethings. And I think that you'll find that it's an extremely interesting story because the business model is so easily understood. It's a bank like the traditional bank that you might have found back in It's a Wonderful Life. Now, of course, with a little bit more sophistication and polish attached to it, but basically it does the things you expect a bank to do and not a whole lot more, and makes a lot of money doing it.
Okay. So let's go ahead and wrap up. This is just a quick update on the Buttonwood Wolves portfolio. We will not be doing anything with this until next week or the week after. But just a quick status update. We are quite pleased with some of those companies up at the top.
Yeah, the ones at the top we're very pleased with, okay?
All right, so here's a reminder that we do archive all of the bull sessions and roundtables and any other special educational sessions on YouTube under Manifest Investing, so you can go back and retrieve at your own time of choosing. Here's our reminder that the roundtable is tonight, Saturday morning at 10. is when we will do the final lockdown on our red rabbits for 2025. And ultimately, we will be taking a closer look at the book on the right. And in fact, this topic right here, we were talking about the equal weighted versus cap weighted subject under Jim Clunan. That's what this post is about, by the way. Do most investors look at investment risk wrong? And it covers the Jim Clunan text that I referred to. So there's our ad for the best small companies. A year ago, we suited up and said we want to get back to doing things the right way, and hopefully we'll stick the landing, Ken.
Well, let's
not talk
cross
about
our
it.
fingers. Yes, let's not talk about it. That's what I was trying to say in a nice way. Okay, let's just shut up about it. All right.
Yeah, because our double-digit lead is no longer. The one on the left is provided by Kim, and that is, I assume, with toes in the sand, Kim. Or is Kim still with us?
I'm still here. Actually, that was, oh my goodness, we're in the car. We're driving to the airport to fly out of Maui because all flights going back are, my flight was at 8 at night, and this was at 6 o'clock at night, and I just rapidly put my phone up to the side window, went click, and I went, oh my
Wow.
goodness.
That's a good catch.
Yeah, it's amazing.
It would have been easy to stay there. Any report on how is Maui doing? You know, it was pretty badly damaged a year and a half ago. What did you
Well, in
find?
Lahaina, where the history of Maui was kept, we didn't drive over there because there's really nothing there. It's all burnt. And actually, there's kind of the locals want only to sell to locals, and so there's some referendums that they don't want anybody, unless they're Hawaiian, to own any condos or anything, or rental units, Airbnbs. But then, and so the rentals down on the mainland are only occupied like 40%, but people are renting up in up country is what they call it.
Okay.
And they're renting up there, but it's going to take time, a lot of time.
Yeah, recovery from a pretty nasty situation. Picture on the
Yeah.
right is simply because I like the picture. And Ken and I have actually been in that area not that long ago, and it's just a good picture. Anything else in the hopper, Ken?
Nothing in the hopper. I'll look up forward to seeing a lot of you this evening at the round table. Remember, folks, we're starting at 8 o'clock now, not 8:30, 8 o'clock p.m. Eastern time for the Mid-Michigan Manifest Investing Roundtable.
All right. Thanks, everybody. I'll get out there and try to pick my stock.
Good night, all.
Thanks.
All right.